Hello, how are you? Today we are going to talk about the kinds of charts, and this is a very special and important part in this channel because first we are starting a new playlist named Technical Analysis, and that is a very powerful way of trading that I'm going to provide you with free. So first episode of our new playlist that is going to be advanced technical analysis is going to be this episode, which is about the conventional kinds of charts that most of the people in the trading world use. This episode is very special and important because second, you should choose your charts wisely. You should the type of the chart that you are going to use rest of your time as a trader, because you can't change that very often. So you should choose the best kind of chart based on your characteristics. After that, you should choose your methodology that you can use the concepts in this channel. We have 4 important kinds of charts, and today we want to talk about these chart types.
Hello, how are you? Mehran's here, your trading companion, and you see your trading companion's companion Leo in the background. It's not animal abuse to attract more subs, it's just why we love animals and we love our pets, so we want them to be in our videos. Anyway, we are going to talk about kinds of charts, and that is a very crucial part of this playlist at first. Why is that so important? Because the charts are the only tools that you are going to use forever. So you can't change your charts, I mean kind of charts, for example candlestick chart or a line chart every day. You should choose one chart based on your characteristics and the background that you have and stick to that. We have 4 kinds of charts that we are going to talk about. Those are the charts that most of the people use. They are candlestick charts, line charts, bar charts, and heiken ashi charts. We are going to talk about their advantages and their disadvantages. Let's go to the charts. Let's talk about our playlists and then go to the charts. In this channel we have 4 playlists that you are seeing, just 2 of them. One is ultimate videos, and that's the ideas and setups, and for example one impact trading plan or trading strategy that I want you to see. So that is a very important playlist. You should watch that playlist completely. And you see the smart money free course here. It's on its 9 or 10th video, so you watch that playlist too. And this video that I'm recording is the first video of technical analysis playlist, so you can learn some advanced concepts about technical analysis, and you learn a very fractal strategical trading plan in this one special playlist, like the smart money course playlist. So in these 2 playlists you are going to learn how the price action works and how you can have a trading plan. So what is a market chart or an asset chart, and what does it shows us? A chart is the interaction between price and time. So a chart shows us where the price is right now in this particular time, or where the price was in that particular time. So for example, when we have the market stopped at 1.08987 for euro to US dollar, we know that at the end of the market, which is the end of Friday, the market was at that price. Or when we go, for example, in this particular time, we know that this big candle, which is the candle of 9 o'clock for 23 April, started here and it ended up here at 12 o'clock. Why? Because it is a 4-hour candle. So we can see where the price is right now and where the price was at a particular time, and we see that graphically, so we can mark out important prices and important support and resistances, the prices that are mentally or that are statically or that are fundamentally important for other traders and big money. Yes, we have some more advanced charts which are volume charts, for example footprints or order flow, or heat map charts which shows us the interaction between price, volume and time. I mean, for example, we can see that here has how many selling and how many buying orders in that particular time, in that particular price, with an order flow chart. We are going to talk about those charts in the volume trading playlist, but first you should have some understanding of price action, so we don't start that playlist yet. So we want to know which charts are important and what are those charts. So let's talk about the important kinds of charts that are being used with most of the traders. First is going to be the line chart, because it's the simplest kind of the chart and it's like the father of all charts. How we can use line charts on TradingView? You can go and click on this button. You can make them to your favorites or not. In these stars, you can click on this start, and for example, it gives you this range chart. But we have these more important charts: bars, candlesticks, line chart and heiken ashi chart. Only the heiken ashi chart is for the premium TradingView subscription, so you may not have this heiken ashi chart on your TradingView if you are using the free version, but you can go and download the heiken ashi for MT4 and use that on MetaTrader for analysis if you like this kind of chart. But I think if you go to the indicator list and click heiken ashi or heiken ashi, I don't know the exact name, you can add that as an indicator as well. You can see that here that we have this heiken ashi chart, but how we can see just those heiken ashi chart? You should go here, you should add on these three dots and you should bring it to forward. So you can see that prior to your charts. If you don't want to see the candlesticks between these heiken ashi charts, you can go and click on this I button, so you hide that Euro USD chart and you just see heiken ashi charts here. It's an indicator, so you don't need the premium subscription for using this indicator. You can thank me later. We are starting with line charts. Line charts are the simplest kind of charts. What they do, they just connect the closing price of every particular time to each other. For example, if I'm using 1 hour candlestick charts, let me show you. You can see that we have some closes here, here, and I'm going to put a dot on every close of these candles. So you can see that I put a dot on every candle's close. I go and hide the Euro to USD chart, and I'm going to just connect these dots to each other. So I connected every dot to each other, which are the closing prices of every candlestick, and I'm going to hide the candlestick chart for you. You can see that we have a line here. I'm going to unhide that and make it a line chart, and you can see that it's exactly the line chart that we are seeing. So the line chart is a graphical view of closing prices of an asset that is connected to each other, and they show us that closing prices in a graphical way. What are the advantages of using a line chart? First is it has less noise than other kinds of charts. I mean all the other charts. What I mean by that, you can see that how the market is flowing in a clean, beautiful way when you are using the line chart. You can see that it is going to the upside and it is going to the downside and vice versa. But when you go, for example, to a bar chart, it is less graphical, it is a little bit noisy, or candlestick charts, it is a lot noisier than other kinds of charts. Why? Because of the shadows, because of the colors and other things that are attached to it. Yes, it is a more powerful way to see the market, in my opinion, but when you are using a line chart, all of these noises are cleaned out or are smoothed out. So the first is less noises. The second one is that it shows us the open and closes. So when we are using some kind of trend line or support and resistance line, or even we want to use just open and closes order blocks, like here or like here. Let me change this color a little bit. So when we are using these concepts with open and closes, the line chart is our best choice. If I want to mark some support and resistance for you so you can see that, I can show you here and here. And when we are seeing this support and resistance at work in a line chart, you can go and change it to candlestick. And the most important thing that we see in candlesticks are the shadows. You can see that, for example, we can see this shadow on a line chart. So the line chart is going to show us the open and closing prices of support and resistances, the trend lines, and a particular time. And that is important for us, because that shows us the real support and resistances. What I mean, for example, if I go to a daily chart and I point out some support and resistances, for example, here using line charts, for example, this support and resistance, that this support that became resistant, and again this support and resistance, and again this support and resistance, that we had a kind of reaction here, and I go and make it to a candlestick chart. You can see that here, for example, we have a shadow. And why it is important for us to use a line chart for the support and resistances is that the daily candle didn't close after this line. So it is a real support and resistance that made price bounce upward and close the daily price, the end of the day price, higher than this price. Or for example here. So it is a strong advantage of a line chart, or here, or here, or even here. I said about that, I pointed this out. And for example, this pin bar. So these are the kinds of things that we can see in other kinds of charts. The other advantage of using a line chart is that we can see the price pattern or price action patterns very clearly in these charts. It is the most clean way to see a price pattern. For example, we have a double top here. If I go to the candlestick, it is less visible. Or here we have a range or a kind of double bottom here, but if I go to the candlestick, you can't see anything here. It's a very hard pattern to see, especially for new traders. Yes, maybe I can find these kinds of patterns with bare eyes, but in line charts they are more visible. For example, here we have some kind of head and shoulders, here we have some kind of head and shoulders, but when I go to the candlestick chart, we can see any of those easily. Another important advantage of a line chart is that drawing dynamic lines, for example, trend lines, are much easier to do on line charts than other kinds of charts. If I want to show you that, you can see that it is a little bit hard to see these kinds of reactions. We don't know use the shadows and or opening and closes, but when we use a line chart, we can see the flow of the market very easily, and we can draw those dynamic lines, for example here, and you can see some very good reactions and pullbacks from this line. For example, if I go to the candlestick, you can see that if I wanted to use just shadows of the candlestick, this line wouldn't be this clean. It's a little bit off here, so we are using that head for, yes, it is more accurate. And if I go to the candlestick, you can see that we filtered out those shadows, and we can take these trades, for example, here, even here, this pullback here, and the more importantly, these pullbacks. So it's so much easier to use line charts to draw dynamic lines on it. Overall, using line charts is the best option, in my opinion, is the best option for long-term investment and position trading. For those who keep their positions for weeks and months, and they are very long range shooters in the markets, so they don't watch for 1 day movement or for 5-minute movement. They are eager to take trades and keep those trades for months. You can't find any other kind of chart that is more powerful and more accurate than line charts for position trading or long-term investment. Let's talk about the next kind of chart, and that is going to be bar chart. First, let's fix the setting of these bar charts, because we can see these bars very accurately. Double click on them, and on thin bars you can change the color here as well. For example, a dark blue, it is good, and a dark red, it's more visible. So what is a bar chart? A bar chart's other name is OHCL chart, or open, high, close, low chart. What does it refer to? The bar chart shows us the highest price of a particular time frame or a particular period of time, the lowest price of it, the opening price, and the closing price. The left horizontal line is the opening price, the right horizontal line is the closing price, and the middle vertical line is the range that price moved from the highest point to the lowest point in that particular period of time. For example, this bar opened here, it went a little bit higher, it went down, and it went a little bit higher again and closed here. It is a down bar, so it is red. So the left one is the opening price, the right one is the closing price, and these two tails on the high and the low are the highest point and the lowest point of the price. What does that even mean? Yes, we have opening price here for this particular period of time. For example, if it is a 4-hour candlestick or it is a 1-hour candlestick. Let's imagine it's a 1-hour candlestick from the hour 10 to hour 11. In the 10 hour, it opened here, so it is the first tick off price that the 10-hour period of time started. So the price was here at the beginning of clock 10, and it went a little bit. For example, in 10:05 it went a little bit higher, it went down. For example, at 10:45 it went higher, and it closed at the 10:59 minute. Like 10 and 59 minutes it closed here. And in opposite of that we have blue bars, which is the bars that its close is higher than its open. So at the start of a 1 hour time frame, it started here, went a little bit lower, it went up, and it closed here. So let's see that on charts. It's 1 hour bar chart. We want to see this special bar here. Let me see if it, yes, it gives me 1 minute time frame. It started from 3 and it closed to 4. So we go to 1 minute time frame and we mark the exactly 3. This is the 3 bar. Let me put a vertical line on the 3 bar, and it is the 3:59. So it is the start of the bar of 3 o'clock to the 4 o'clock. So what we want to see here, we want to mark our opening price with this trend line. So it opened here, it closed right here. So I'm seeing the right horizontal line on this candle for the opening price and the left horizontal line in this, bar for the closing price. But we have the highest point as a tail and the lowest point as its lower tail. So it started here, it is our line, it went from here to here, and the lowest point is here as well. I'm seeing this line and this line. I'm making it big because when we go to, and it is the closing price, when we go to 1 hour time frame, we may not see that. And if I copy this and you can see that it's exactly like the original one. It's a little bit different, but it's because of the scale of the trading view itself. I wanted to teach you that because it is important for you to understand this concept for reading bar charts and candlestick charts. So the left horizontal line is the opening price, the right horizontal line is the closing price, and this is the lowest price that the market went in 3 o'clock, and it is the highest price when the market went between 3 o'clock to 4 o'clock. It is a little bit different to this, but the overall it is very like this. It's because the scale of trading view sometimes change in hours to hours, or maybe we chose a wrong 1 minute bar, for example, for opening price, one before that or one after that. Anyway, this is how it works. Let's talk about its advantages over all other charts, or over some charts, because some of them are similar to candlestick charts. First, it has shadows. We don't have that in for example, line charts. We don't have that accurately with heiken ashi charts. So the shadows are a very important part of bar charts that shows us where the support and resistances are. I said that the real support and resistances are visible on line charts, but you should know that we can find those real support and resistances on line charts when we draw our support and resistances on line charts, and then we see the shadows going through that support and resistances and gets rejected. So the open and close support and resistances without shadows are not very accurate. So the first thing is that these bar charts has shadows. For example, we see some kind of line shadow here. The price rejected this POI here and here, and this is important for us because it shows us a very good support and resistant, or in this case resistant. Or when we go further, we can see that here and here, but we can see these support and resistances on line charts. Let me show you. You see that it is not visible on this chart. So it shows us the support and resistances, and that is important for us. Or for example here, or let me show you here. You may say that it is a fake shadow and it is not important because it got broken, but we have a golden rule in trading that is a result versus effort. And it means that if you have some effort to pull the market to the downside, for example here sellers did a great amount of hard work to pull the market lower, but they didn't succeed and it got broken. So the order like that got this shadow broken is very important because the sellers didn't get their results. So it's the buyer's turn to get their results. So it is an important way of thinking. Can we see those open and close support and resistances with bare eyes without for example line charts? Yes, we can do that. For example, if I go a little bit in the past, you can see that we have some kind of open and closes here, but it is a very hard job to do for especially new traders who are just learning how to use bar charts and line charts, and it gets validated. For example here, when these shadows penetrate this support and resistance and they get rejected. So the first important thing is that it shows us shadows. So it shows us real support and resistances, and it shows us the rejection of price, and it shows us a lot of details with open, close, high and low of that period of the time that the line chart doesn't do, for example, because it just shows us the closing price of every movement, because it is a open high low close, open high close and low chart that shows us the opening and closing of the price with vertical lines, horizontal lines on left and right side of it, and it shows us the complete range of the price action in that period of the time. It provides us with a better view of the market than line charts, but it is a little bit noisier. It shows us the momentum and the opening and closes that has a strong direction in the market, so it shows us the direction of the market better than the line charts. Yes, the line charts shows us a smoother way to see the direction of the market, but when the momentum comes in the market and when we want to use the concepts of momentums and especially validating order blocks which have imbalances and momentum after them, the bar charts is better than line charts. For example, here we see this momentum to the downside very visible and graphical, but in line charts it's just a blue line that came down and went upward, but at least you can see the opening and closes, and you can see the imbalances, for example here, and especially you can see those in a graphical and colorful way. Or for example this momentum or this and these momentums as well. So it gives us a better view with the momentum toward the market. They are very similar to candlesticks, but the candlesticks are better and cuter and more graphical than bar charts. Reading the bar charts are harder than reading the candlesticks. For example, if you use VSA or Wyckoff method, you know this is a 2-bar reversal. Yes, you should know VSA to use this as well, because only with Wyckoff method without VSA you will get crushed in the markets, in my opinion. But here is a 2-bar reversal and the market will come back and touch that 2-bar reversal or retest that 2-bar reversal and go to the downside. But you can see these kinds of concepts on a line charts. So another important thing is that you can see patterns, especially candlestick or bar patterns in the bar chart, but you can see those kinds of patterns in the line charts. In my opinion, it is a very good kind of chart for swing trading as well as heiken ashi, but heiken ashi is a little bit harder to read. We are going to talk about that. So we arrived to the heiken ashi charts. You can use this button here, or you can use just the heiken ashi from here. I use the heiken ashi from here because I want to switch between the charts so you can see my points and understand that. But you can go and simply add this indicator so you don't need a premium subscription. What is the importance of heiken ashi chart? Heiken ashi chart is some kind of advanced averaged out candlestick chart. It is very similar to candlestick, but it is different in some views, and the most important thing is that it is average of those candlesticks, and it has very few noises in a run. That's so important for if you are a trend trader, or you are a swing trader, or you are a strategical algorithmic trader who just trade with algorithmic point of view. Why? Because it has less noise than other kinds of charts. You can see that if I switch to a candlestick chart, for example, from here to here, you can see we have a lot of noises, more than the noise that we see in the heiken ashi charts. Or the better example is here. You can see how we have some noises here and here and here. I go to candlestick charts and you can see that we have a lot of red candles as well. So it has less noises than other kinds of charts. The other advantage of using a heiken ashi chart is that it prevents us from exiting a trade prematurely or exiting a trade too early, especially for mechanical trading. You can see this dump, and when we go to candlesticks, you see a lot of up bars. So you may exit the trade very early, but if you use heiken ashi charts, you can see that it's all red, and it's made of Japan, so it is not a bad chart to use. It has some disadvantages because if you get used to using candlesticks or bar charts or even the line charts, you may say that here is some kind of shadow, or here we have a doji candle, but when you go to candlestick, you can see that it's not the case. Or here you can see that this candle has a line shadow, but going to heiken ashi changes that. Or for example here. And the other important thing is that the creation of the heiken ashi chart is not the creation of other kinds of charts. You may say that it is going to upside and it is going to downside, and then this candlestick forms, but this candlestick forms, for for example, this heiken stick accurately, is formed when the time of this candle finished. You can see this candle when it is forming. It's some other shapes that you are seeing. So when that candle, that daily candle, that daily heiken, that hourly heiken, that 4-hour heiken, you may think that these are accurate when they are forming and use those concepts. I sometimes use those concepts. For example, I see the chart is going to the upside and it suddenly starts to make a long shadow between the candle formation time frame, not after the candle has formed. You may think that the heiken is like that, but no. The heiken forms its candles after that particular period of the time, because it's some algorithmic formula that makes these shapes. But heiken charts are very strong kinds of charts that many people use in some strategies, so you can use that in your strategies. But the most important thing is that if you entered a trade, you can simply, for example, you entered the trade here. You can simply go and switch to heiken, and you won't see a noise unless you go here. And after that, you can see that no previous lows got broken and it went to the upside. So when you enter the market, after that you can switch to heiken, so you won't exit your trade too early. The last kind of chart is the candlestick charts that I'm in love with. They shows us the opening, the closing, and the highest and the lowest price in that particular time frame, and they are more graphical and prettier than bar charts. So when we have a candlestick like this, let me print that for you. So what does it mean? When it is a green candle, it started or it opened in the lower part of its body, and when it's a red candle, it started on the higher part of its body. What is the body? It's this meaty part of the candlestick, the thicker part of the candlestick, and these are its shadows. What does those parts means? The body is showing us the opening price. If it's a green candlestick or it's the up candlestick, it's the lower part of the body, and the close, which is the higher part of the body. So the body is the price that started from here and ended here. But the high and the low, or these shadows, shows us the complete range of that price action in that period of the time. For example, it started here and it finished here, but for example it went down, then it came up and it finished here. And the red candle is opposite of that, so it is the high shadow, it is the low shadow. This started here, opened here, it for example went upside, it went down, and it closed here. So it is like bar charts, but it has some details that you should know. Let's talk about its advantages. First, they are cuter, and that is an important fact for me. Second, they are more graphical than bar charts, and they hurt your eyes less. If I didn't want to record this video, I would use this dark theme, but because I'm using this record video, I'm going to use the light mode. Another thing is that important when I'm doing these settings here without pausing the video, it is not because I don't appreciate your time. It is because you can learn how to do those settings yourself. You can learn how to change the settings, how to change the settings of an indicator, or how to change the settings of your charts. So that's because I think you may like to see me changing the settings, and if you don't like that, you can say that in the comments, so I'm going to stop that. So they are more visible, they are more graphical, they are cuter. And just by looking at the shadows and the body of those candles, we are going to learn a lot of details about the chart. For example, here we can say that, oh, this shadow is important. It is a rejection block which made a good point for entering the market after it flipped. Or for example, here we can say that it is a big movement to the upside, so it may be a fake movement. Or it is a good downside movement, so we can enter the market for first retest. So by just looking at the price action of a candlestick, we can say a lot of things about the charts. Another important thing, it is made of Japan, and the other thing is that we can learn a lot of candlestick patterns that are going to work well. You may think that the candlestick patterns are useless, and you are right with the concepts that you know, because the candlestick patterns work when you know VSA. You can't just go and use a candlestick pattern for entering the market. Why the candlesticks are useless in this world that we are living in, but they weren't useless, for example, 50 years ago, because you would have only daily 1 hour and, for example, weekly and monthly charts printed and sent to your house, and then you go and mark those candlestick patterns and those support and resistances and other things on just weekly, daily, and 1 hour. And tomorrow you could, for example, take some trades, or you could call your broker and make some orders. But in this world that we are living in, with the you can see that here, with infinite number of time frames, these kinds of concepts are useless. Why? Because it may be some good candlestick pattern here that you are seeing. Let me go further. For example, this simple candlestick may be a good pattern for you in this time frame, but when I go to, what do you see here? I see a very strong move to the upside, and I going to say that I can use this point if a reversal happens. Or if I go to 15 seconds, what do you see here? 10 seconds, what do you see here? You can see that it's a reversal. Yes, you know that it is going to break this low and it is going to dump to the hell, but you don't know that right now. You can go and say in the comments that, no, I'm going to sell this, for example, pattern. No, you won't. And I know that after these years of trading and these years of educating people to do crazy things. So a simple candlestick pattern can be very, very different with these time frames that we have. Yes, it is a very good opportunity for us. It is a very good age to trade in, because we have a lot of time frames, we have a lot of knowledge, and we have a lot of multimedia and books and other courses that we can use, and we have an enormous number of indicators. But some kinds of patterns and concepts are useless now, and the candlestick patterns are one of them, unless you know VSA, and they become one of the most crazy things that you can do in the markets when you know VSA. Thank you for watching this video. This video is the first video of our technical analysis playlist. It is a very advanced point of view toward the technical analysis and markets, and today we talked about charts. Your support is much appreciated in these dark times. I'm in an internet blackout here with, I don't know, some million% inflation. Yes, when I can connect to the internet and I can trade. I can make money like kings here because we have a lot of inflation here and we are in an internet blackout, so I can't trade consistently. Thank you for your watching. Follow this channel for some very advanced things that you can find anywhere else, and goodbye.